couple of housekeeping items. We're still waiting on Rip It to reach out for sponsorship. Rip It, if you're listening, we're open for business. We want your sponsorship. We'll do an ad read for you every Goat Rodeo. Just let us know. Also, off mic a few minutes ago, Simon, you were talking about old used Marpat utility trousers being the optimal yard work lounge pants. I agreed, so long as you get them at a discount. Our producer said that he wasn't able to find them at a discount. These are hundreds of dollars and they're totally fucking uncomfortable.
They are not hundreds of dollars. You've got to be thinking of like the Cry version. Regular ass Marpat,
which I would prefer. If I'm going to pay $250-$300, I would prefer Cry because they're so comfortable. Yeah.
I'm promising you can get on any internet surplus website and just get you some Marpat pants for $20-$30 at most.
Probably. Yeah.
I'm a little bit of a camouflage nerd. I love a pair of camo pants. I probably have 4 pairs of different weird vintage camouflage in my closet right now.
Is that a punk thing? That's a punk thing, right?
Yeah, for sure. Camo pants for sure. It is a part of the uniform essentially.
Tiger stripe? You got tiger stripe? You got a pair of tiger stripe utility trousers you can send me or sell me or something?
Yeah, I have regular OG like Woodland BDU. I've got tiger stripe. I've got this Greek tiger stripe that's got like a slash of blue through it that the Greeks used to use. Yeah. It's called Greek Lizard.
So sexy.
Exactly. Pants. It's awesome. They're a great pair of pants. I love tiger stripe. I mean, there really aren't objectively many cooler patterns than tiger stripe camouflage. It's awesome.
So Simon, you're not going to the Metallica concert tonight?
No, that's going to be a stadium of some sort.
Yeah, not punk.
Yeah, when Metallica starts playing, the illegal warehouse venue circuit, I'm there. I'll be first in line for sure.
When do you think that happens? Hetfield's not going to the warehouse anytime soon. That guy's worth too much money.
Yeah, no, he's a coward.
So you'll appreciate this, Simon. Growing up in DC, one of my first 3 concerts was seeing Ian from Fugazi at 9:30.
There you go. Can't beat it.
What year was that, Brian?
I graduated in high school in 95. So would have been early high school years. Sophomore, so 92,
Ian still
93.
goes to shows. Like people see him in DC shows all the time. We see like there's the church still does shows, St. Stephen's, which has been a DC punk venue since like 85.
He lives right above U Street.
Yeah,
he still lives right in the hood.
Yeah, that's how I got my job on the Hill. I went
Fugazi. Fugazi got you a job.
Not far, the punk scene, right? I went to an illegal show, like an illegal warehouse venue in D.C. on the night of Obama's second inauguration, and I met a bunch of people that were, punks, but also had policy jobs, and they became good friends. And a few years later, one of them helped me because she was working in the Senate. She helped me get my first interviews in the Senate.
What does the punk lobby look like, Simon? What does the punk lobby? What do they care about?
So they don't. They're generally not supporters of the U.S. government. However, I can tell you firsthand, there are some pretty senior staffers spread across the entirety of the U.S. government that come from this background.
Undoubtedly.
To include Senate committee staffers, folks in the White House, probably less folks in the current White House than the previous White House, but that's a little bit of my bias.
Brian's got some very senior colleagues who are deep in the punk scene. I've had conversations with them. That's pretty cool. I'm going to segue hard here. Sorry, Simon. Hard segue. It's my way.
Sure.
Welcome to this week's Goat Rodeo Podcast, where we talk about national security, technology, innovation, geopolitics, and everything in between. Joined by regular co-host Simon Kuhn, fellow Marine Corps veteran, and this week in for regular Dave Cottle is the one and only inimitable Brian MacCarthy from Booz Allen Hamilton, head of Booz Allen Ventures, amongst many, many other things. We're probably going to want to get to know him just a little bit for the audience here at the outset, but Simon, do you want to pick up where you were about to jump in, or should we hand it off to Brian real quick?
I just wanted to plug one of my former employers, Holland and Knight, because the current managing partner...
Not an ad read. This is not an ad read.
No one thinks this is an ad read. Holland and Knight makes $2 billion a year. They're not advertising here. But the managing partner of Holland and Knight is a phenomenal guy named David Whitestone, who, because of his work with the airline industry, also does a lot of representation for Iron Maiden, and has this like phenomenal piece of Iron Maiden's jet, like a piece of the plane hanging up in his office. And so when I went to that big, blue chip, white leather shoe law firm, Whitestone was just like, so you ever listen to Fugazi? And I was like, what? This one just totally blindsided me, because he saw the tattoos and immediately like read me to filth, knew exactly what I was into. I was like, oh, this is cool. I can work here.
That's awesome. Speaking of tattoos, Brian, you haven't seen this yet. No, look. No, you want to Simon's seen it, but you haven't. Look, check this out. Check it out. I got some ink.
Whoa.
Yeah. Little old former Mormon Garrett inked up.
I'm impressed. Do you want to give a shout out to the artist?
That I'll defer to Simon. Does he want shout outs?
We did it last week, and I'm happy to do it again. It was Tad Payton at Jinx Proof Tattoos in Washington, D.C.
Georgetown. Yep.
Tad's
awesome.
I have not had him, but I have definitely received tattoos from that tattoo parlor.
Oh, cool.
It's the oldest shop in town. They've been there forever.
They have been there forever. And I know this is going to go against the Goat Rodeo pod, but for the civilians out there who didn't get pallets and truckloads of Rip It, I specifically
there you go.
Got the do, because us, public school kids who, didn't put on the uniform, still needed caffeine. Before there was Monster or anything else, OG was Mountain Dew. So I'm
the last time.
You're well and truly caffeinated. That's a good way to start the this conversation. Brian, let's beyond the Mountain Dew and your DC and Fugazi background. Tell us a bit about who you are, where you're from right now. I gave the call out to Booz Allen Ventures, which I think is what you're recently and best known for, but you've got a deeper background. You've even got a family history in national security matters. So I don't know how deep you want to go, but maybe just a quick, like, who are you for the listeners?
Yeah. Well, thank you, Garrett. It's great to be on with, quite frankly, good friends, and I've considered you and Simon friends for a while now. So always love seeing you. Just a little bit about me. I grew up in McLean, Virginia, across the river, third generation, Washingtonian, extended Washingtonian into McLean. My background, and this might even be news for you, comes from my heritage from my grandfather, and then two of my other grandparents. So 3 out of my 4 grandparents served. My grandfather, which we did a lot of digging 30 years after his death, was part of the original stand-up of the CIA. His name is Shane MacCarthy, and he worked for President Nixon and the Dulles brothers, and then was ultimately fired by JFK. So there's a great image of him with JFK that the family knew about, but we didn't know that JFK had actually fired him. He was, technically the original person. Do you remember when you were growing up and you had to go do the Presidential Youth Physical Fitness Award? So he was stood up to run that division under Nixon, and that was his cover. Generally, yeah. Father was a Navy guy, served in Vietnam and Da Nang, specifically as a surface warfare officer, and then did some applied missions for Langley. And I, after graduating from JMU in '99, went up to New York, did some stuff in software and in women's fashion. So obviously natural path to capital and defense tech. But the true story is I just needed a little bit more purpose in my life. And when my father got sick and died of a brain tumor, I came back to DC and very much wanted to serve in a different capacity and get much closer to mission. And I've said to you in private, my number one regret in life is not putting on the uniform and serving in the military. And this is probably as close as I could get. So
and
that's a little bit of background.
And you've got, before the Booz Allen Venture CVC piece took off, which I believe was your original kind of idea, concept, an entrepreneurial whatever activity at Booz Allen. You were there managing programs, I think Department of Navy programs. Maybe I'm misremembering, but you've got a history at Booz that extends beyond the CVC.
Yeah, 14 years at Booz. Grew up in the VA, actually. First, a gentleman by the name of Young Bang hired me. And I think several of you will know Young from his last post. And then a woman named Susan Penfield. So I rotated in and out of civilian and DoD missions. And then in 2015 was asked, fortuitously, obviously, for Booz, but also for the U.S. Army to go and scout dual-use capabilities and technologies for an Army contract out in San Francisco. So I stood up a post in San Francisco. That was about 4 months before, may he rest in peace, SecDef Ash Carter went out there and stood up DIU. And we were in the same building as DIU in downtown San Francisco in a place called Galvanize. And that's where I met, all the friends and family from that DIU. Technically it wasn't the 1.0 crew, it was the 2.0 crew, but been in that mix since 2015. And then the ventures concept stood up with generally myself and two others, a gentleman by the name of Travis Bales, who you guys know very well, and then another guy named Adam Porter Price. And Adam is now running predominantly corporate development and M&A over at Anduril.
Right. Oh, man, awesome bit of background. We're seeing, obviously, kind of we're in the, I don't know what stage we're in. We're in the middle of a defense technology venture capital kind of renaissance, all being driven by national security requirements, right? And we're seeing these massive funding rounds. I just pulled this out of the news. Friend of mine, multiple time founder, John Tennant, and venture investor once upon a time, perhaps still does. And now co-CEO at Chaos Industries. They just raised $275 million in a Series C. We were remarking off camera or off air that they're qualitatively different types of funding events going on. Some of them seem to be a little bit more aimed at kind of momentum and capturing market terrain, as opposed to rapidly developing a specific product. It's instead aimed at perhaps being a momentum-based platform of the future. I think I respect that. That hasn't been the way that we've built our company, but I think it's a way to go about things in the industry. But that's just one of 10 such massive funding rounds into the top 5 or top 10 darlings of the defense technology space. When you as a CVC look at that kind of activity, obviously kind of the trend in venture is to get in on some of these big deals, because this is, that's a way to invest, right? You follow the big deals and you follow the great investors and you follow the great founders and you follow kind of the momentum. How do you perceive the momentum play at CVC like Booz, like Booz's venture team? Like how do you look at those deals? Does that make you want to get in on it? Does it make you curious? Are you kind of doubtful? How do you feel about any of that?
I'll give a nod to, and listen, all respect to John and the Chaos team and, the folks funding the round. So this is irrespective of that. We've seen a number of these types of deals. Maybe just a little bit about kind of our fund and why we stood it up, because it's got a different kind of maturity rate, right? So we are not traditionally a financial investor, but it's probably not a good idea for me to go into my CFO's office and say, I'd like $100 million. Let me spend it on whatever tech I want,
right.
With no returns. I don't think that's a model that succeeds. But, Trey Stevens, who, famously of Founders Fund and a lot of kind of the momentum and success that Anduril's had, wrote this great article. I think it was covered in TechCrunch. It might be, a different one, but it was, the idea was around kind of, following the flock, sheep analogy. And the idea was, listen, we're only going to pick one winner, right? And that winner we're going to go double and triple and quadruple down on. And that's Founders Fund model. And then you have other models out there, whether it be DFJ or GC or A16, that is going to, predominantly go after it all and let the winners sort themselves out a little bit on their own, right? I think there is room for multiple winners. That said, I mean, we can go into the history, Simon, you're probably the expert on this. When only 2 to 3% is going to the non-traditionals out of what is likely to pass a $1 trillion budget.
Right. I want to talk about reconciliation here in a sec, but keep going.
Thoughts on that trillion.
My personal opinion is that is only good for our industry and good for investors. And we will ultimately see over the range of the next 5 to 10 years. My caution is often with companies taking too much money. We all know there have been some in the defense tech space. It looks like a money grab in some instances, not chaos, obviously, but a money grab in some instances. You take it because it's sitting there on the table, and so why not? And there's massive risk in that, right? There's massive risk for like all of the downside effects, which is, can you ultimately build scalable product, or are you going to throw money at the problem?
Right.
And I think everybody has been pretty generally reasonable when it comes to valuations. And so, I mean, none of us will know for a couple years, right? I mean, we started our vintage in 2021 with $100 million. And, I'll continue to tell my CFO, I'll know in a couple of years whether we can return that plus 2 to 3x.
I mean, a lot of these plays, I'm just going to call them plays. So company formation, venture capital investments, et cetera, are specifically responding to not only a market need, so something like a demand signal or a potential industry disruption, which is certainly the case given that there's been a long kind of 30-year legacy buildup of technologies, programs, vendors, et cetera, in the national security space. And that looks to an outsider, an entrepreneurial outsider, like a target for disruption. So that's part of it. Another part of it is that there's simply an expansion of TAM, right? Like with Trump 2.0 and the Republican trifecta, and with a slightly reduced top line defense budget down to what, 840, 850, something like that, Simon. But on the table is $150 billion or so of reconciliation money. We are talking about a $1 trillion, defense or national security budget here. Like, that's got to be an attractive thing. Like, pump $275 million into a company like Chaos. Can they just grab a little bit of that money? Can they grab a few dollars in those programs? Well, yeah, I mean, that's not an unreasonable bet. Simon, what do you have to say about kind of state of play with reconciliation? Because a couple of weeks ago we started talking about this as if it were a surefire thing, and like maybe it's going to happen, maybe it's not. I realize they're running into problems, but delays, whatever, it's politics. What's the current state of play?
So reconciliation is a funny thing, right? Because with one party having control of both houses of Congress and the admin, they can all by themselves pass a reconciliation package. All it requires is for that one party to agree on what the package should be. So the problems that we're seeing with reconciliation are intra-party, challenges amongst the Republicans, because they don't need a single Democrat vote to pass any of the reconciliation stuff. They need to abide by some procedural rules called the Byrd rules, and they do a really archaic process called the Byrd path, and it's really just about how you spend money. But ultimately, the Republicans could do reconciliation entirely on their own.
Have you witnessed the Byrd bath?
I have participated in the Byrd bath.
Oh my God.
The way the Byrd bath goes down is you meet with the parliamentarian and you essentially justify whatever portion of the reconciliation bill that you wrote, and you explain how the money's being spent, and the parliamentarian tells you fell within the rules, you're good, or Much scarier, you violated the rules, and now the whole package is sunk.
Good for you, Simon. Good for you. You didn't bite on the hook that I laid out there.
No,
it was a humor hook. You're just too much of a professional.
I refuse to make it easy for you.
Sorry. Yeah, keep going.
You gotta wait a little bit earlier to catch Simon.
I'm sorry.
But the bird bath is scary because if you violate the bird bath rules, the whole package like goes down together. And so you have this big, like, scary internal conversation about whatever we put in here has to be flawless out of the gate, because if the other side, who also is talking to the parliamentarian with you and trying to explain why you violated the bird bath, to kill the whole package. I don't think the Republicans are at any risk of that. It's not a particularly difficult thing. It's, mandatory funding that lasts 10 years. The details of it are not super important, but which is odd to say. But what matters here is that all the Republicans have to do is sort of come together internally and decide, here's what we're going to do, and like march out in unison. They have to be in lockstep with each other because they don't have big enough majorities for defections. So all this to say, I do disagree with one of your like basic points about this $1 trillion. It's not. It's a cut. It's fully a cut to the DoD budget. A one-time infusion of cash is not a long-term, like, predictable infusion across the DoD. So right now, and that's what we have to think about when you think about an infusion of cash right now, there was just a paper that came out. This woman named Amanda Bressler, she did a thesis paper for the Naval Postgraduate School, and she analyzed the spending from 2013 to 2023. 93% of contract dollars went to 31 companies in the last 10 years. So as we are currently set up, the contracting dollars are really being funneled still to those, large primes. And if you do a huge infusion of cash right now, I promise you, it may be better, but it's not going to be any better than probably 60 or 70%. I would actually say if 60% of that money went to just those 31, it would be a huge victory for the innovation ecosystem. But I don't think we're going to do that well.
Well, I do think that because it can be creatively deployed alongside...
It's not being creatively deployed. It's buying submarines. It's buying ships. It is not $150 billion for the innovation ecosystem. It's $150 billion, and the first 2/3 is wiped off the table because it's going to the big programs.
Better stated, it can be used in a way that is aligned with emerging or rejiggered priorities. And so because the innovation ecosystem and call it the Silicon Valley set that kind of flowed into the executive branch or executive adjacent, influencer positions with the new Trump admin. I do think that the innovation ecosystem, companies like ours, CEOs like me, potentially folks like Brian who look at this from a venture angle, are seeing this as a way to lever up the next year, the next 2 years, the next 3 years of an innovation program or an upstart company that's trying to capture market share or trying to capture a program. Brian, is that how you see it?
Yeah, I mean, listen, I think when you go into the details and, shout out to Pete Magliani and his Substack, who does like probably the best, either weekly or biweekly, I forget how often he posts, his reconciliation overview, I think was phenomenal. And I think that dropped like a week ago. One of the things that I noticed in it was, Simon's dead right. You look and follow the J books down to the level of funding. And I don't know how material the new EO is going to play within the, this reconciliation bill. I mean, you've got $14 billion going to expedite innovation for the warfighter. I'm not really sure what that means or whether that's going to go to non-traditionals and neoprimes. But the majority of all of the money, whether it be for Golden Dome, whether it be for reshoring, for manufacturing, for, fleets, ammunitions, air superiority, border security, like, I think it does feel a bit like a money grab. And the thing as an investor I am cautious about is, will my CEOs be thoughtful about how to go after specific line items within the J books that they can build in and get, viable momentum, deal after deal, program after program. I mean, you guys know how hard it is to scale into, the enterprise of DoD, right? And the other thing that quite frankly concerns me is a lot of the people that took the package, within this administration who are exiting the Pentagon are largely, or, is thought to be largely a lot of very, very good AOs. And with them going out the door and going back into industry, I think it'll be really interesting to watch over the next 180 days how this gets deployed to change the number that, Simon just pointed out from Naval Postgraduate School. It doesn't shock me at all that, 93% went to 31 primes.
But Brian, what I'd be interested to know from the VC perspective is how much you guys are looking at the out years when we get into this budget conversation. And I say that because all of your major defense appropriators, Mitch McConnell, Susan Collins, I think the Mitch McConnell quote was, Congress will not be fooled by budget tricks. Because the structure that we're using for this $1 trillion budget is a dramatically lower budget in the out years. Like, it's just a fact. So that you're going to see an infusion up front. Let's say your program office gets a small cut in the base budget, but gets a big drop of cash from reconciliation. Year 2, 3, and 4, you will not get that drop of cash. You'll just have a lower base budget. How do you sustain? How do you keep up the momentum? How do you do new things? If you buy a bunch of new stuff in year 1 and then have a dramatically reduced budget in 2, 3, and 4, how do you bring on new entrants as new technologies are coming out? How do you stay ahead of the curve with that front-loaded sort of thing?
There are no guarantees, right? The overview from my perspective is that, adjudicating that plus up, they've said, right? Like, it's going to be over predominantly just fiscal year 26, and in the out years, while they can spend that over a 4-year period, if you did like a DCF model on what every single CEO says is his path to get to 10 million ARR, 20 million ARR, 30 million ARR, you're like, I don't see that in the out years. And I know you don't see it because it does not exist. It is kind of vaporware. So it is a little bit of a, it is why this particular subset of the venture industry, if we don't get early wins, and I mean like in the next 18 months, we are going to have a massive capital excursion out. Everybody's in right now, and everybody started to get in last year. There have been, phenomenal venture firms that have been in it, for 10, 20 years. Lockheed Martin, In-Q-Tel, Founders Fund, A16, Lux, et cetera, et cetera, et cetera. We're new entrants, but we've been around the block for a long, long time. So we know what this out year expenditure is going to look like. But I would be concerned because to fight the next fight against the PLA, they don't have this issue. They don't have a capital problem. They've got 150 state funds that they can just take the best of what they want and deploy it towards the PLA. So yeah, I worry about the folks pouring billions, tens of billions into this space that if they don't see exits in the next 2 to 3 years, we'll likely find other places to spend it.
I want to jump in here with maybe the founder perspective. Near-term budget plus up, even if it's a non-recurring $150 billion reconciliation package, and even if only slivers of that actually end up out into the non-traditional contracting mix, the innovation economy, that is still a very attractive thing to me as a founder, because I care a lot about what happens in the next 12 to 18 to 24 months, a lot. And I definitely need to be building and casting and pitching a strategic vision that extends well beyond that time horizon. But I'm very concerned about what happens in the next 12 to 18 to 24. And the reason for that is that oftentimes we're running at something like break even, or maybe even a net burns, position. And so we are really, really trying to generate as much revenue as we possibly can, no matter how we generate it in the next 12 to 18. Because what we don't want is to have to go prostrate ourselves to the likes of Brian MacCarthy for money. We don't want to have to do that. We would prefer not to. We'd prefer to grow on revenue and hit our plan and hit our revenue. And you can't do that pure vision. Well, some people definitely can. Some people definitely can. But I like, Brian, that you brought back the kind of the strategic context for why any of this is happening at all, why any of this is a topic beyond just kind of the Doge kind of efficiency, new Republican administration element. But it's because there are major adversaries or competitors out there like China, the Chinese Communist Party, the People's Liberation Army. And I like that you brought up the idea that they don't have some of these problems. They certainly have some of their own problems and different problems than what we have. But I do think that it's almost like a diagnosis, an erroneous diagnosis to say that they are doing this much more efficiently, and so we need to compete. I hope what you're not saying is that we need to compete on those same terms and take the statist approach to capital and resource allocation, but instead do what America does best, which is unlock the innovation ecosystem through, hands-off competition, best technology rise to the top. And what the U.S. government needs to do in that mix is be the demand signal and be the buyer. And in my opinion, the major diagnosis here to get the innovation economy engaged is you need to be a good buyer. And by good buyer, I mean like a fast buyer. And, the experience for young non-traditionals is often that capital isn't patient. Entrepreneurs aren't patient. They don't want to wait for 10, whatever years to get the major contract signal and the major contract influx of purchase orders or whatever. So, maybe respond to that if you will. That's like, the statist Chinese approach to building their national security enterprise versus an America that seemingly doesn't know how to compete, effectively, leveraging its own strengths.
Well, a couple things, right? So I think you hit the nail on the head. There is zero competition when it comes to founders and building novel capabilities and technologies. We have the best innovation economy by far in the world, and there's nobody even close. China is not close. But, and here's a massive issue we're going to face, is China has absolutely zero concern, everybody knows this, for stealing our intellectual property. That's one. Two is they absolutely have no issue taking their state funds and using those state funds to hand jam down into the PLA certain capabilities, right? So if President Trump could go to Google, Meta, Tesla, the big thing and say, that technology is now mine and you have no say in it, we would have a totally different issue. And the third is we have a scaling problem. We have a buyer problem. And they just don't have that in communism environment. Yeah. I also think like they are, if you have read their, AI strategies, they are thoughtful in a way about how they are going to apply this from a unit economic perspective and from a technology perspective over a very long range of time. And when we live in 1 and 2 year budget cycles, it is incredibly hard for the U.S. military to do that in a predictable manner.
With a sloppy, messy democracy that has 2 year, congressional House cycles, 6 year Senate cycles, 4 year presidential administration cycles, it feels like a lot of starting, stopping, rejiggering, and gear shifting along the way, herky jerky almost, compared with a more predictable, potentially long-term Communist Party strategy that they lay down in 5 year increments, and it's very dependable, especially when your president decides that he wants to stick around for a very long time. President Xi, much farther beyond kind of the normative limits on Communist Party chairmanship and the presidential seat.
The other thing, and just a nod to probably one of the more brilliant folks on China that I have met, Frank Finelli. If you know Frank, he's like a legend. Was one of the people who helped, if not the major instrument for taking Booz Allen public while he was at Carlyle, still at Carlyle. He is probably one of the most knowledgeable people in this space. And I ran into him this past week at the Hill and Valley Forum / some of the parties that were tangential to that. And he was like, I don't think a lot of the folks on the Hill understand how invested China is in our periodic table. And if you think about that for a second, and you think about the components that make up a very large, vast majority of our weapons capabilities, and from a raw materials perspective, how a lot of that, if not a majority of that, is coming from China, you start to kind of head scratch and say, we've got an issue. Like, we've got a major issue. And it was just put in a way that, like, I had not heard before, that I thought was very interesting. And I know that he does a lot of writing around this subject. Perhaps our editor could, in the comments at some point link to it. But he's one of the most knowledgeable people on the subject. And he's been having this conversation on the Hill around the China Shock 2.0 technologies, quantitative trends, key companies, et cetera, for a long, long time.
Yeah, interesting. Yeah, Ian can drop those into the show notes. Back on the topic potentially of this reconciliation package, future budgets, off your cycle or off your budget cycles, et cetera. I think the rising, call it the neoprime set, sees this as a massive near-term opportunity to lever themselves into the conversation and get sticky over the long term. Legacy primes, like you work at one of them. How does Booz Allen perceive this kind of rising generation of upstart companies that may or may not be friendly, might even be hostile to the legacy set in terms of market penetration, capture or delivery to programs, that sort of thing? How do you view that? Is this a zero sum problem that you're confronting as a legacy prime? Is it potentially better than that? Could it be that the future is actually heterogeneous between a legacy set and a rising set? Is it something in between? What do you think?
It's a great question, and I know we've talked about this offline a little bit, right? The reason why I joined Booz Allen 14 years ago was predominantly because at the time, and like, we're not trying to run necessarily away from a 110-year legacy of management consulting work. That could be a dirty term, these days, but like, I can just tell you, having been on many front-end programs of software delivery integration into the U.S. government, I think it is somewhat a nuanced answer in that, like, all of these SaaS and neoprime and hardware as a service and managed service companies are just going to seamlessly integrate themselves into major programs of record. It is not how the U.S. government buys. It is more important that that's not how the U.S. government actually implements. So I think there has to be a symbiotic, relationship between, what is traditionally seen as the systems integrators, the technology integrators, and that's what we call ourselves. We don't build SaaS, okay? We don't build hardware programs. We build component technologies that should be going on top of the best commercial capabilities in the world. So I think we are heavily a proponent of COTS over GOTS. I think in order for our U.S. military to be the best and baddest in the world, which I know the SecDef and the president and the cabinet want, I would also extend that to the intelligence community. And as a civilian, whether it be the IRS or the VA, getting home loans or whatever, I don't want to build things bespoke for every single agency, right? Like, right. I don't think that's necessarily a good economic decision as a taxpayer, and we're all taxpayers on this call. I think the notion of painting, some primes as good or bad, as having seen or been seen, and it's been said to me, right? The Halloween context, right? Like there is, you leave, you put the lights on, and you have a candy, box, and you say, please take one, right? That we only just played by the rules. I think that's ridiculous. That's not how we view ourselves. We have always viewed ourselves as integrating the best technology for the mission or for the warfighter. And what we want to be on the side of, Garrett, and we didn't actually disclose this at the beginning, but we've invested in you for 3+ years. And so I should caveat this, that we want to be on the side and solve this early on, since 2015, 2016, that the United States Department of Defense and many other agencies would have to move this route, because we do have a massive ballooning budget. And we need to be leading out there for bringing commercial technologies into the U.S. government. So
can I ask a real targeted question? I don't mean this to be a snipe, so hopefully it doesn't hit you that way. Why couldn't a company like ours, or one of these kind of neo primes, why couldn't they do the systems integration work on their own? Why do they need to partner or work with alongside a Booz Allen, as opposed to going it alone and building new structures, or filling that SI, technology integration role themselves?
The easiest answer is usually the most logical, which is, then you wouldn't be currently valued at whatever you're valued at. You're not going to get a Bessemer SaaS index valuation at 10 to 14x if you're doing, labor integration, which, let's be honest, that's how Palantir got their start. And then
I was going to say, that does sound like the Palantir model, right? They provided basically an engineering and support services contract that embedded software licenses into it. So they kind of broke that model a little bit. They did. And then they got hammered when they went public. Yeah, sure.
So all you got to see,
that could have been the reason why they waited so long to go public too, right?
Right. And so you could look at maybe a tangential. So the easiest answer is, because the companies that are funding this, we'll just, I don't know, the SDDG 100 don't want a sizable portion of your business being at 8 to 10% margin.
Right.
They are funding a business to extract 80% margin or higher.
Yep.
I just don't particularly think that these companies are just plug and play. And I think, this is Brian MacCarthy's opinion, not Booz Allen corporate opinion, but I would suggest that, probably several of my compadres over here would agree with this, since we are on the front end of, a lot of this work on the AI, quantum, cyber side, that when deployed, out of the box, a lot of this stuff doesn't work.
Right.
So, who is going to be the field engineer? Is it going to be the U.S. military? Is it going to be a civilian workforce? Is it going to be technology integrators? Or is it going to be your, SVDG 100 saying, no, our stuff's fine. We're on the hook for it. We'll find the bodies, the talent. By the way, we'll get them through the security process. We'll get everything ATO'd ourselves. We'll go hire all the bodies and get them cleared properly.
Right.
We'll take on all that risk. And I think as an investor, the investor would be like, why? Why would you do that? I'm paying you to build the best software in the world and sell it again and again and again and again and again.
This is exactly why I think it's too easy and too simple to criticize from the outside as either a non-traditional or as an investor or just as a bystander. and say it's too easy to say the legacy primes are the problem, which I know that is some of the sentiment, that's some of the vibe that's kind of coming out of national security circles right now. It's too easy to say that. The future undoubtedly is much more kind of synergistic than that simple criticism, and it looks a lot more like probably what you just described, or what I'm attempting to describe now, which is legacy primes have their place. They've been holding down the fort for a long ass time, and they've been delivering a massive amount of value to the national security enterprise for decades, in some cases over 100 years, right? I mean, Booz Allen is not a young company, right? And they've been doing it for a very long time, and there's a reason why they remain relevant. And over time, I gotta believe that the overlap between the legacies and the upstarts, the neoprimes, is going to be synergistic. We're basically carving out room for the consolidated post Last Supper 5 to 6 big defense contractors for something that looks a lot more like 10 to 20. And from an American perspective, somebody who cares about leveraging free market, dynamics on behalf of the American population, that sounds great, right? That's competition, that's everything else. Simon, how does this play in Congress? And what am I right in articulating the vibe shift that I just described? Like you're on Capitol Hill, you're meeting with folks all the time. Is that vibe shift accurate? Is there a more realistic view on this scenario that I just described? Is that playing in the halls of Congress? What's your read?
I wouldn't call it a vibe shift so much as I'd call it a knife fight.
Sure.
I mean, my personal stance is that the government is the problem, because it's the government's job to, we talked about this last time, step in and kneecap people when the market incentives incentivize them to necessarily monopolize and push out and really capture market share in such a way that is anti-competitive. It's the government's job to step in and go, nope, clearing the decks again, making it fair for everyone, making it accessible to new entrants. Because at the end of the day, this business, you are selling to the state. So it can never be pure capitalism, because if it was pure capitalism, we would sell a different drone to every infantry unit in the military, and we would let them all buy whatever they want. And then over time, they would figure out which one they like best and sort of consolidate that way. But that would be an insane way to run a national military force. It's just, you would never be able to distribute the funds efficiently enough to make that work. So you kind of have to have this thing where competitors are constantly trying to make the best, most scalable version. And once they get their foothold, they do everything they can to protect that space and to make it harder for other people to snatch their contracts from them. These are natural reactions. And it's the government's role to step in and make sure that first and foremost, we're doing what's best for, the warfighting enterprise, and then the taxpayer that funds it, and then the companies who are participating. They have to be third order in that thing as long as the state is the customer. So do I think there's a vibe shift? I feel like I think the government is waking up due to the demand signal of all of these entrepreneurs who want to participate in all of this venture ecosystem that's saying, hey, you have backed yourself into such a corner by not forcing competition into this space and not being this aggressive government customer. And now you're wasting money and not getting good capability. So we need to sort of shake things up. What that actually looks like, I'm still not sure, because I think a lot of these neo-primes are going to do the same thing that older primes did, which is try to corner as much as they can, really solidify their positions. Competition is a fun thing that we all talk about. It's good and it produces the best results until we win. And then we want it to go away because we want to continue to be the winner.
Totally.
I used to talk the same way about compromise on the Hill. Everyone loves compromise until it's time to compromise. And then you're an asshole.
Yeah, I mean, startups have to fight this knife fight. If it's knife fight vibes we're talking about, startups have to fight the knife fight vibes with knife fight vibes and become monopolists. That is the drive for a startup, right?
Yeah.
The startup identifies a TAM and they want all of it. They want 100% of that TAM, and their investors want them to want that 100% of the TAM. That's the way of things.
It's the government's job to level the playing field. Yeah, Brian, go ahead.
I mean, Gary, you and I have lived this. We have had a requirement.
Mm-hmm.
We have had a contract. Mm-hmm. We have had both sides of our fences say, love this founder, love their tech. We've got a major program and a client who is interested. And then the buying mechanism sucked and it broke down.
Yeah,
and,
sucked a lot.
And, when I talk about the symbiotic nature of this all actually having to work together, I think there is a middle ground and a lot of people don't talk about it. I get why the VCs are on the hill and the neoprimes are on the hill saying, that dude is taking my cheese. I want more cheese. But on our side, in some cases, well, first of all, I would say that, like, just to preface, we are going to be sinking a lot more money into this ecosystem. And I'm very excited to, be, back on the podcast when I can talk about Fund 2. Break. There is no incentive structure.
Jeez, that was a big tease, Brian. I'm not going to pull on that. I'm not pulling that thread, but that was a big tease.
If I value my job, that is about all you'll get. That's it. The current incentive structure, and it is an incentive structure. Like, just to be clear, it is as narrow as this, as Simon, accurately and yourself pointed out. It is one. Are we getting the best tech into the hands of the warfighter? We all know the answer is no, right? It just is.
Yep.
The second thing is, in order to get outside capital money continuing to flow into this ecosystem, there has to be many, many winners. And
that's right.
That probably doesn't look like a flip of the top 10 with like, oh, Palantir and Anduril will lose everything.
Right. Agree.
Right. So, when you take those two together, we have to find a way. And there is plenty of programs out there that we could incentivize if we go to this outcomes-based model. And so That's what we've said to Doge. That's what we've said to GSA. That's what we've said to all the PEOs is we would love to help build and bring software to the U.S. military on an outcomes firm fixed price model. Cost plus doesn't work for that.
Totally. Yeah, completely agree. I mean, this is the famous Charlie Munger quote, show me the incentives, I'll show you the outcome, right? Like
love that
if you want the outcome of best tech in the hands of warfighters and you want a true 21st century deterrent warfighting capability, the incentives have to be lined up against that. And I think that is where we have faltered as a country as we proceeded through a long 20 to 30 year peace post Cold War. I mean, that's probably just the way of things. Well, fellas, it's been a good conversation. I'll just note that this week, neither Brian nor I are at the In-Q-Tel CEO Summit or SOF Week or whatever. Do you just not feel the FOMO, Brian? You just don't care? Like virtue signaling, like you did enough last week at Hill and Valley, or what's going on in your calendar? Yeah. Do
you want the real answer?
I do. I really do. Yeah. Chicago's just beautiful in May. What is it?
No, I am working to get this thing closed.
Yeah.
And I know who I want to invest in, and I know what that pipeline looks like. And there are plenty of good, companies at both the In-Q-Tel Summit and at SOF Week this week. But I am not going to deal make at either one of those locations. You have to find those CEOs in their tech many months before that. And so anybody that I would actually need to meet, I have probably already met. I do want to put in a little bit of a plug. There is a major difference between showcasing a product at a massive, trade show.
Yeah.
And being operational in combat.
Totally.
Having not served in combat, I applaud, and it's why I love investing in guys like you and Reveal. Having a great product demo is awesome. Having a super glitzy Michael Bay advertisement for your product, cool as shit, right? But at the end of the day, I want to make sure that we're investing in companies who have real operational capability, and it's it's not going to happen at Solve or CEO Summit or any of the others. They all have their place. Where I would recommend them to go, probably though, is Boone Summit, because I think that one's a little bit different.
Hey, the first rule of Boone Summit is we don't talk about it publicly, Brian. But
right.
But still, I'm looking forward to seeing you in October in Montana. That's for damn sure. This is maybe a bit of a teaser, but Reveal's decided that it actually doesn't want to do classic video marketing in the way that everybody seems to do. Tapping the Michael Bay thing for visual content generation, and instead, what you'll be seeing from Reveal over the next probably couple of years is a series of raw video captured in our demonstration and testing and evaluation environments alongside actual warfighters. Putting tech through the paces in a field environment. And so it's not demos, right? This is not like full polished demos. We're going to see everything from like ready room and briefing with the guys to actual live training scenarios conducted by bona fide killers, and that's where we're putting our energy. And I don't even think of it as marketing. I think of it as a video capture device happened to be in the field as we were testing and evaluating our technology in the hands of real warfighters. And so you're gonna see a lot of stuff coming out on that topic from us in the next few months. It'll be good. Well, Brian, let's have you on next time. You've got something big and cool to talk about. Fun riffing with you. Really appreciate it. And for those out in listener land, follow Brian. He's a font of wisdom. Posts prolifically in the socials, and he's a good follow. And while you're doing that, give the podcast a follow on the podcast platform of your choice, and engage with us. Let us know what you want us to talk about. We like kind of this, rough and ready ramble format, and would love to cycle in some good topics in the event that there's something you want to hear. So hit us up, and we'll see you next time.